point. So your focus and your passion, I presume, is exploration. So I'll begin by asking you. So exploration is often the most underfunded stage in Africa's mining pipeline. How can we unlock early stage investment confidence, particularly for critical minerals exploration?
Yeah, I think we've got to be realistic, and it's not just an African problem that, worldwide there's been funded exploration, and that's why there's a shortage of these critical minerals. So we've had the demand side explode, but at the same side, there hasn't been new mines developed. If you look at copper, for instance, there's only been 3 major copper mines developed in the last decade. Historically, you were looking at 3 per year. The fact is there hasn't been exploration, but it's very important to know that it's a very competitive environment. The exploration equity dollar is hot liquid. It moves fast and it follows a path of least resistance. So it'll go wherever it's welcome. If you want the money, you've got to be welcoming to it. You can't force it to come to you. You can't keep it trapped, and you can't abuse it. You've actually got to make it welcome, treat it well, and then it stays and it multiplies and it grows. And I think that's what Africa needs to learn, is we've got to stop whinging about why us, why is it so bad, why does nobody come here? We've got to make the exploration money welcome. And that's, when I say exploration, it's the whole funding of mine development and mineral development has to be welcome. Then it will come. And there are countries that are doing well. We look at Namibia, Botswana, they're great examples of, they've created a regulatory environment that's welcoming, it's stable, there's a trust relationship building between the government and the investors, and the money's coming and mines are being developed and the economies are growing. So it does work, and it can work in Africa.
Thank you for that. That's quite apt, because it's all about finding those enabling mechanisms to fund the exploration and not necessarily waiting for the money to just come to us, being proactive about it. And so thank you for that insight. I'll move to you, Jay. So just from a standpoint of digital traceability, so again, starting with your passion, how can digital traceability solutions improve transparency, accountability, and pricing power, particularly for African mineral exports?
Yeah, so what we're seeing in the international market, especially all driven out of the EU, US is going to hop on there, and battery minerals passports. So they want to see that the mining is responsible and ESG and blah, 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 all the different acronyms. And the only way to do that is to trace it from the origin to wherever it's going and the purpose of where it's going. And you can get carbon credits, though I wrote a book that said carbon credits are crap, but you can get carbon credits if you can prove that the minerals that you're taking out of the ground are going to a battery or they're going to something that's sustainable. Without traceability, you're in the dark, right? And we have a lot of consultants running around there taking copious notes about human rights and are there kids in the mines, et cetera. But with traceability, we can do it. There's only been a couple pilots that have not gone well right now, and I'm working with the governments to try to put in a mining traceability system.
And it's exactly with that level of traceability that we can access the international markets, because that's always the concern, that because there's no traceability, then we don't have that leg to stand on when we're trying to trade on global platforms. So thank you for that. I'll move on to Tariq, and we'll now look at it from a governance and legal standpoint, again, starting with your passion. So, in your view, what do you think are the key barriers to establishing that transparent, traceable mineral supply chain in Africa?
Thanks, Lawrence. It's interesting to hear what you're saying, Jay. I mean, that's a lot of what we're involved in as well, working with ASM, working in the Great Lakes region. So our focus, as I say, is more in in the Great Lakes and other areas of the world rather than in Southern Africa. But there are particular aspects of complexity to traceability there that we need to be aware of and that we need to focus on. For example, smuggling is an issue. In the Great Lakes, obviously, conflict is an issue as well. I think one of the big issues in the legal and regulatory framework is tax, because taxation often is a disincentive to lawful export of minerals, and we see that a lot, and it's something that we try to counter by ensuring that we've got an incentivized and advantageous buying program where we operate. One thing that we're seeing quite often now in respect to traceability, and I think this is more of a governance point rather than a legal or regulatory one, is people are often noticing the shortfalls in the traceability systems. Where we operate, the standard for traceability, or at least what the traceability providers are typically offering, is maybe not what it was 2 years ago. And so we find that our customers, be they smelters, traders, or OEMs, they want to have what most people are calling enhanced due diligence on the minerals as well. So for example, for Minex, we can track the origin of solder wire or powder from the very mine it comes from. So it's effectively single origin minerals. So I think we're going to see more of that. And I think it's often a governance point now rather than a legal or regulatory point.
Fantastic, thanks for that. And that's the regulatory environment that can either attract or deter investors. So I think that's a good platform to now start examining some of the practical aspects and the lessons that we've learned in the past. So I think with that, I'll come back to you, Errol, to ask your point of view on just some of the experience that you've had. So you've led Orion's project in the Northern Cape. There's a lot of minerals and minerals development in the region. So what lessons can you draw from South Africa's regulatory environment in attracting or deterring investors?
Yeah, look, I think one of the things that really comes home to me is I came back to South Africa in 2017 to build a company because I recognize that South Africa has incredible mineral wealth. The minerals are in the ground, and no matter how bad the environment is, if the minerals are in the ground, people will come and invest to get them out. I didn't realize just how hard it was, to be quite honest. And you know, a lot of people say, geez, you know, you were so successful with Orion. You know, I managed to raise R1 billion in exploration money in 6 years. That's terrible. You know, elsewhere in the world, there are dozens and dozens of CEOs that are raising R1 billion in 6 or 7 years to execute exploration and development programs. It shouldn't be that that is a major crowning glory. It's quite embarrassing, because we should all be doing that. And the fact is that, again, I'll get back to this regulatory environment, over-regulated and a lot of uncertainty. And, you know, over lunch, I was just busy chatting to somebody, and it came home to me that, sadly, South Africa has become institutionally corrupt. And it's a really sad thing to say. But even when our regulations are manageable, and they might not be perfect, and I don't think there's anywhere in the world where your laws and regulations are perfect, but the way that the regulations are managed by officials and by government officials is actually abusive. And that's what I was speaking about earlier. Money does not like being abused. The people that bring money do not like being abused. If they feel abused, if they feel pressured, well, they'll squeeze out and go somewhere else. And that's what happens in South Africa, is you raise money to do something amazing, and there's a queue of people standing in your way to be an impediment. Well, they're standing in your way to be gatekeepers and take a bit for themselves. But they become an impediment and they stop the project going ahead, and South Africa fails as a result. And I've been one of the biggest proponents and driving hard to get a workable mining charter and actually a revision of the MPRDA to get an investor-friendly MPRDA. But that is not going to make any difference unless the officials that are actioning that MPRDA, that law, and the regulations that go around it, are not actually honest and do their work with integrity. Because there's always a way to insert a gatekeeper. And unfortunately, I think, over the years I've worked in almost every country in Africa. There's very few countries that I haven't worked. And the reality is, everywhere there are gatekeepers. And those gatekeepers actually result in the gates staying closed and the gates rusting and eventually failing. And I'm very pleased that in South Africa we're moving to a point now that we're going to get a mining cadastre. We've been promised it for years and years. I believe that there is one cadastre that's actually semi-functional for the Western Cape. I haven't seen it yet. Apparently you're not allowed to see it unless you already have a right, which is a little bit strange. But I think we're moving in a direction because we shouldn't have gatekeepers. And as soon as we've got information and systems in a way that it's transparent and accessible and people can see on a screen what's happening. If I go apply for a mining right in Australia today, I can see exactly who else has applied and what they've got, who is there already, how long they're going to have it, what do they have to do, have they done everything that they should have done, is it going to become available again? That's transparency, and we've got to get to a point of transparency, and that makes stuff happen. So it's not all lost. There is a lot of exciting, positive stuff happening at the moment, but it comes down to the core of all things. We've got to remove this kernel of corruption in everything, remove the gatekeepers, then everything else will work, then money will come here, and money grows money.
Thank you. Thank you for that very frank and experience and perspective that you share. And this is from the perspective of South Africa. So if you can open it up a bit wider to the remainder of Africa, which is also a particular opportunity that we recognize, but at the same time, we see the opportunity particularly for us, or offered by the small and medium scale mining companies, and how we can facilitate their development. So if I can come to you, Jay, I'll ask you a question from the technology perspective. So what technologies do you think are proving the most transformative in linking those small-scale producers to global buyers through what you would consider to be verifiable supply chains?
I just came across an organization called Women in Mining. I had never heard of them. They're all throughout Africa, and it's about getting the artisanal miners, women, access to global markets. And it was, I believe, funded by the AU, and I rolled my eyes when I heard that. But they are growing and helping these women. So it's those types of organizations, but from a data transparency, look, in Zambia, we took the honeybee and traced the honey all the way through to the bottle. So I figure if we can do a honeybee, we can do a hard object that's in the ground. And I always start with the president, and I don't go to the gatekeepers, because if the president is not on board, the rest is not going to happen. I would never go to a minister. I was just sharing with these ladies of a minister story here in South Africa. It was not pleasant, and that's the last time I'll do it. So we'll start always at the top. We do all data transparency. We pull together data for all the ministries so that we can solve a big problem, so that these African countries become sovereign nations. We do it in property. Property tax is 2% compliant across Africa. We can do it there. We pull every ministry together. We make a data visualization. We use AI, and we can show you who owes what, where, and whether they're a taxpayer or not. Same thing can be done for mining, and that is what we're working on right now. But we start at the president level. We don't worry about the gatekeepers because they're always going to be there with their hands out. I'm an American. I can't take a dime or give a dime. Don't want to look in the orange jumpsuit suit in prison. So we always try to get the tone at the top. If it's not going to be at the top, if it's not going to be compliant, then we're out.
Quite like that. Start right at the top. Lesson learned. So on that, then, because we recognize that that's where the legal frameworks are often the obstacle, that's a great place to continue the conversation with you, Tariq. So in terms of legal frameworks, and now still sticking with the small scale, still sticking with artisanal miners, how do you think legal frameworks can evolve to support what is recognized as responsible sourcing? Now, this is particularly for artisanal and small-scale mining communities, where we want to see that benefits start to be realized.
Sure. Maybe it pains me slightly as a lawyer to say it, but there is always more to it than law. The frameworks themselves are obviously a big aspect here, but I think that what we're seeing in terms of developing capacity in our territories where we work is that there's a definite shift towards locally focused development, towards the value add happening in the territory where the minerals are extracted. We're hearing that from a lot of governments recently across Africa. We tried to help it, and I think a lot of other people will need to start trying to help it by assisting with the access to capital. So allowing the lending to develop to those sites in order to facilitate their growth and in order to bring in the skills necessary to better exploit those minerals. Again, it's the legal framework, I guess, across many different territories will mean many different things, but we think, much like you, that technology is key to this in terms of showing what there is, showing what's produced, and introducing transparency through the supply chain, starting at the very beginning when the minerals are taken out of the ground.
Oh, thank you for that. So on that, remember, because particularly when we start discussing critical minerals, the intent is mineral diversification. And we want to see that variety of minerals across different regions that have the supply to be able to then have the capacity, have the means to supply them. So with that, I'll come back to you, Errol. So on your experience, what do you think? What role should local capital markets play in financing that mineral diversification? And how can we make them more accessible to those that need it? Junior miners, medium-scale miners, and so on.
Yeah, look, the reality is that exploration and mine development is a high-risk investment universe. And it's only equity investment that actually works. It's part of a portfolio that somebody's prepared to put at enormous risk and put it in the hands of somebody that they trust could deliver an extraordinary return. So it's a gamble. It really is. And those people, again, when you're dealing with such a volatile capital market as what we are globally at the moment, there's a lot of other opportunities for the investment dollar. There's other places where people invest. We get a company like AngloGold Ashanti went up 100% in the last month. They could have doubled your money in a blue chip stock. So why invest in a junior mining company? And the junior miners have to make themselves investable, and also their host countries have to make them investable. The junior miners and explorers, they are entrepreneurs. They see opportunity where nobody else has seen opportunity, and they develop it. They grab it like terriers, and they shake it until it actually starts doing what it has to do. So they work hard, and they squeeze out something for very little money. And they do what the major mining companies can't do. They very cost effectively, very quickly go in, sniff out the opportunity and expand it and get it to the point that it becomes more formally investable. And then your majors come in and the value chain works. People speak about getting effective stock exchanges. I hear a lot of criticism of our local exchange. I think the JSE is quite a functional trading platform. It's not fantastic, it's not the best, but it's quite functional, and it can work, and it can do its job. But you do get these scandals that come through, and at the moment there's a couple of whiffs of scandal coming through. That taints the whole market, and whether it's right or wrong has to be clarified very quickly, because the capital investor that comes to a market, a listed market, wants to know that there's at least somebody that's looking after certain standards. And we've got to protect those standards. We've got to make sure that sanctity and respect of trading platforms is important. And that's why the ASX, the NASDAQ, the LSE, there are exchanges that are the TSX, TSXV. These exchanges are very successful in doing that. And people say, well, listen, I've got a bit of money, I'm going to put it into a high-risk scenario, but at least let me go through a route that is lower risk. Let me go through a stock exchange where the readers are going to check the claims that have been made as far as they can be checked. And that's very important. The readers of these stock exchanges have got a job to play, but they mustn't strangle again. They mustn't become gatekeepers that strangle the whole thing, and then it goes nowhere. You've got to keep things flowing. You've got to keep motion. As soon as you stop the motion and there's no momentum anymore, the market just gets bored and it moves on and it goes somewhere else, investable. And also their host countries have to make them investable. The junior miners and explorers, they are entrepreneurs. They see opportunity where nobody else has seen opportunity, and they develop it. They grab it like terriers and they shake it until it actually starts doing what it has to do. So they work hard and they squeeze out something for very little money. And they do what the major mining companies can't do. They very cost effectively, very quickly go in, sniff out the opportunity and expand it and get it to the point that it becomes more formally investable. And then your majors come in and the value chain works. People speak about getting effective stock exchanges. I hear a lot of criticism of our local exchange. I think the JSE is quite a functional trading platform. It's not fantastic, it's not the best, but it's quite functional, and it can work, and it can do its job. But you do get these scandals that come through, and at the moment there's a couple of whiffs of scandal coming through. That taints the whole market, and whether it's right or wrong has to be clarified very quickly, because the capital investor that comes to a market, a listed market, wants to know that there's at least somebody that's looking after certain standards. And we've got to protect those standards. We've got to make sure that sanctity and respect of trading platforms is important. And that's why the ASX, the NASDAQ, the LSE, there are exchanges that are the TSX, TSXV. These exchanges are very successful in doing that. And people say, well, listen, I've got a bit of money, I'm going to put it into a high-risk scenario, but at least let me go through a route that is lower risk. Let me go through a stock exchange where the readers are going to check the claims that have been made as far as they can be checked. And that's very important. The readers of these stock exchanges have got a job to play, but they mustn't strangle again. They mustn't become gatekeepers that strangle the whole thing, and then it goes nowhere. You've got to keep things flowing. You've got to keep motion. As soon as you stop the motion and there's no momentum anymore, the market just gets bored and it moves on and it goes somewhere else. So we do have to keep the momentum. We've got to make sure there's more efficiencies. But listen, we've got to be realistic. There's a reason why people aren't investing in the high-risk exploration environment in South Africa. It's just not an investable investment class at the moment. People, the same people, are investing in other jurisdictions. So it's not about the exchange, it's not about the platforms, it's not about the brokers. It's about the operating environment isn't investor friendly at the moment. We've got to be introspective. We've got to look and say, what are others doing that are better than us, and why are they getting the money and we not getting it? And it's like alcoholism. And you can only deal with the problem when you recognize you've got the problem. We need to put up our hand and say, man, we're waking up every day with a headache, and it's only going to go away if we're honest with ourselves and sort it out. And that's where it all starts.
Oh, thank you. Quite like that. So it's about equity investment, but having that clearly defined entry and exit point, and also a realistic and transparent assessment of the risk involved. That's quite apt. So if I can shift now to another barrier, which is to enter the international market, which is ESG compliance. We know we need to have it if we want to get on that platform. So given that focus on ESG compliance, Jay, in your view, how can data-driven systems help African governments in particular and companies meet these international reporting standards?
Well, once you have the data, you can show whether it's ESG or not, right? Or whether you appear to be. I would say if we step back and look globally, everyone's trying to beat China, right? They got 99% of the rare earth minerals. US is like, oh, we haven't done any exploration in a long time because of environmental standards, so now a lot of money is being dumped there. I'm speaking with Australia. They failed miserably over here. They've been kicked out of so many mines because they did backroom deals. They did all these things. And I think it's come to a point where traceability, transparency, ESG will force the transparency issue. Because, like you said, no one's going to invest in a place that may or may not work, and there's no assurities. So what we're seeing, and I'm working with Australia, especially in the battery minerals, they don't have any cobalt. They have a lot of lithium, but they don't have cobalt. So everyone needs what Africa has. So you guys are at the apex of, the light is staring you at the eye, and how you treat it and how you manage your data, your mining, your minerals, your resources, your human resources, everything matters right now. And I'm speaking with these minister of mines. I just was with the minister of mine of Congo. He's the first minister of mines in Congo that has a mining background concept. And I told him, I said, sir, you're the most powerful man in the world right now. You sit on $27 trillion of unmined minerals. What are you going to do? He goes, well, I got to be worried about the environment. And I'm like, really? I've never heard that out of a minister of mines. He's like, no, because with that comes with a great responsibility. So I know he's focused on it. We'll see where it goes when the money starts to flow. But with ESG, like I said, EU, US, they'll pay a premium for that ESG check. I know China does not care, and that's who everybody's competing with. But I do think there is the push to be better and more responsible than China has been.
Thank you for that. So there we can see that it is a challenge, but there is a big opportunity there as well. Because if we can develop that expertise, if we can not just do it as a tick box exercise, do it according to the international standards, we have the opportunity to essentially leapfrog the competitors, China in particular. Okay, so if I can come to you, Tariq, on digital certification, because that's another route that is potentially promising, and especially with regard to due diligence verification. So in your view, what role does digital certification, due diligence verification play in strengthening our negotiating position, particularly within global critical minerals trade?
Yeah, it's an important point. Thanks, Lawrence. It's going to be interesting to see how that certification works. Obviously, one of the key aspects to it will be trust in the process, and across the the various territories and geographies of this continent, you'll encounter different concerns and different questions. What we're seeing, particularly in the Great Lakes region, is the potential for let's say, regulatory changes and regulatory developments outside of the African continent. So in the Great Lakes, we've got there are other things, but there are two big pieces of legislation and regulation that we need to consider. First, from the US, we've got the Dodd-Frank Act, which impacts directly on mineral exports on the countries bordering DRC, which affects what we've got to do. And we, just from a geopolitical standpoint right now, I think everybody's anticipating what changes might happen there in respect of the exports of minerals. As well as that, we've got OECD guidelines on traceability, which affect everything. It's quite curious to see in terms of that you can be in the Great Lakes region and have to adhere to criteria, which if you go to, say, another country that's been conflict affected in a different part of Africa, say a little bit further north or a little bit further west, you don't have those same criteria that you need to follow. So the certification thing, it's curious to see whether that carries across everywhere, or whether there'll be a focus in particular geographies. We'll see also with there are proposed changes as well to the Kimberley process. I think it's the UAE that's got the presidency of that right now, and so the understanding of what conflict minerals will mean is interesting to see how that develops. But yeah, just almost again like your point, Jay, we have to understand in this, I mean, it's maybe not a unipolar world now, but geopolitics is going to have a big impact as people rush to get these critical minerals, these battery metals, and just understanding what the different approaches are. I mean, we see China and the US obviously have a very clear approach to obtaining these critical minerals. From Europe, it's less clear. There seems to be a degree of hesitation as to how they're going to approach it. But one thing that we're not really talking about so much is how consumer appetites or consumer approaches to these minerals is developing as well. Because things like traceability are important for consumers, certainly in Europe. My accent probably gives it away, but I was born and raised in Europe, and people are aware. When you mention DRC, when you mention Rwanda to the average person there, they do think of the reputation of the minerals that come from there. And we've seen with Apple being prosecuted by the government of the DRC in France and Belgium, that there are risks to it. Apple deregistered from the ITSCI program in the Great Lakes, and it's not accepting any material from either Congo or Rwanda. So I think that's more to do with consumer aspects rather than government aspects. So we'll see what happens. We'll see how it develops. But I do think it's a kind of a patchwork, and we can't talk about the whole continent as one, just because there are different challenges in different locations.
No, absolutely. And there's actually far more to unpack. But unfortunately, I see I'm getting an eye from the MC, so we do have to draw the session to a close. But I think I'll take my liberty here and ask if there's a 1-minute takeaway that you'd like to leave with us, particularly your message on what the answer to that last question of the panel. How do we unlock investment and capital solutions in these long ignored but critical areas? So I'll start at the far end this time with you, Tariq. What do you think?
Yeah, I mean, it's fascinating. I mean, we operate we operate in the semi-industrialized, smaller scale sector. So, equity isn't something you're going to get so easily there. But what we're doing, and we're working with a lot of partners, particularly in the Middle East on this, is developing Islamic finance-based approaches, or if not, correct Islamic finance, at least profit share approaches that incentivize the producers to stay in the value chain and really kind of tie everyone's interest in the same direction, which we're finding a lot of positivity on that.
Thank you. And Eugene?
I think finance comes with traceability, and that gives assurances to investors. I will tell you, anytime I say I'm an American company that works in Africa, you can't imagine people's faces in America. They're like, why? And because the opportunity is so great, and we have opportunity to help these communities out, and we see the travesties that these people live in as a result of mining, of bad mining. The water's polluted. So we're all about traceability, and I think until you have traceability, the big capital markets aren't going to come.
Thank you. And Errol?
Yeah, I think we must focus on responsible regulation, not over-regulation. Sometimes with the best intentions, we do the worst damage. Just a very quick little example is I'm Vice Chairman of the South African Diamond Producers. The Kimberley Protocol, which is seen as one of the most effective traceability things that's ever been done on a commodity anywhere on the planet, has actually effectively killed artisanal mining for diamonds in South Africa. You know that every artisanal miner that mines diamonds in South Africa has to bring their diamonds to Pretoria every 2 weeks and show it to the state diamond trader and offer him 10% of whatever he's dug. And by the time he gets back to the Richtersveld, it's cost him more than the parcel of diamonds. It's killed artisanal diamond mining. So we've got to be careful of things done with the best intentions that have the worst outcomes. So, but there are a lot of great stories, and I think technology is going to help with a lot of these.
Oh, fantastic. Thank you so much. And please join me in thanking our panel for their insights and for the variety of views that they gave, which really allowed us to unpack this topic in detail. Please join me in thanking them.